Hello everyone and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. We are here at the Vancouver Resource Investment Conference and joined by none other than the CEO of Miles Franklin Precious Metals. It is Mr. Andy Schectman. It's great to see you.
Good to see you too, Jesse. Thanks for having me, bud.
Yeah, it's great to have you here and to meet you in person. This is excellent. So I want to talk a little bit about the presentation that you gave earlier today, The Great Reset, Here is How It Happens. Could you break it down for us and maybe any highlights that you think is particularly important for people to be paying attention to?
Yeah, I guess in simplistic terms, it is the loss of the petrodollar status. And it is the realization that has been the protection, in simplistic terms, the protection of the Saudi kingdom for the past nearly 50 years that has granted us the world reserve currency or the petrodollar status. By extension, the protection of the Saudi kingdom was a deal that OPEC and Saudi Arabia, obviously, would denominate oil in dollars exclusively. And since 1974, nearly 85% of all oil sold across the globe has been in U.S. dollars. And this demand for dollars, this synthetic demand, has given us the luxury of being world reserve. And that has been unchallenged for all of our lifetimes until recently. And there were some pivots or some mile markers along the way that really started to make this become evident that maybe it was beginning to wane. And it started in September of 2021 when Saudi Arabia accepted a joint military cooperation agreement with Russia. That was, in my opinion, marked the beginning of the end of the petrodollar. Subsequently, as we move forward, we're seeing more and more deals that are being struck outside the dollar, the weaponizing of the dollar against Russia. And it's always been my opinion that as the administrator of the world reserve currency, it is not up to us to decide who can and cannot use the dollar. It becomes hypocritical, it becomes a problem. And I think it incentivized the rest of the world to think, well, geez, are we next? Could this possibly be us? And as it incentivized them to find alternatives. If we fast forward, we see the admission by Saudi Arabia to China that, hey, you are our most important oil partner this year and for the next 50 years, beginning to accentuate this belief that I had. And just recently at the meeting in Davos, they came out and said, well, we're open to using other currencies. The Great Reset to me is a hypothetical situation where the world dumps dollars because OPEC and Saudi Arabia announced that they no longer are only going to accept dollars for oil purchases. And if you realize the amount of dollars that have been accumulated globally over the last 50 years, if that happens and there are alternatives to be had, or maybe they just stop taking dollars altogether from a nation that is moving green and has inflated away the value of their currency, and they say, well, we're going to take the new petro yuan, which is immediately convertible into gold on the Shanghai Gold Exchange. Or maybe they take the new BRICS currency, which we have been told will be backed by commodities, presumably gold. Whatever it is, maybe it's a combination of the yuan, of gold, of the ruble, of the rupee, and others, and it just doesn't have to be dollars anymore. Bang! The whole world dumps dollars in unison, I would suspect. And as those dollars hit the shore here of the U.S., of North America, after an environment of the last 3 years where asset prices have been blown sky high due to easy money, I guess you could say, where in the last 3.5 years, the U.S. created more money than in the history of the entire country preceding. Where asset prices have become distorted, where misallocations of resource and capital have created illusions and anomalies and distortions. And if that happens, and though the dollars come crashing home, the first thing that has to happen to compensate for the loss of purchasing power is for interest rates to spike. And the crazy thing about all of this, when Klaus Schwab said there'll be a great reset, you'll own nothing and you'll be happy, I thought the guy's crazy. But the more you think about it, if an event like that happened, where all of a sudden there was a new petro reserve vehicle, or just the ability to buy oil globally not through dollars, and those dollars get dumped and interest rates spike, it's the perfect storm where asset prices have been blown sky high unrealistically in an environment that is largely illusionary, and they react to a spike in interest rates. They are all, stocks, bonds, and real estate, the three pillars of wealth, are inversely correlated to that event. Could it happen like that? Sure, absolutely it could. Will it? Don't know. But I will tell you that the moves that are being made by the Saudis and by many of the other countries that are have expressed interest or have already joined the BRICS nations is very concerning, very frightening. You throw into the mix the Belt Road Initiative and the Shanghai Cooperation Organization, you are talking 80% of human population that will move away from the dollar as the sole settlement currency for oil. And if that happens and the dollars hit our shore in a tsunami of inflation, pushing interest rates to the moon, there is your great reset where stocks, bonds, and real estate, in the wake of a crashing dollar, all react inversely to a spike in interest rates. And I think that's exactly how it would happen. And I think it would happen very quickly. It would happen in a matter of hours or days, and as the world recalibrates to what it is and what you have to own in order to possess oil.
So how important is it that an alternate currency, potential reserve currency, is backed by gold? Because you mentioned the BRICS nations currency there, that they're talking about backing with a basket of commodities potentially. Is that even possible when we're talking about backing it with oil or other metals? Or do you think we really need a 100% gold backing to any alternative to the US dollar as a reserve?
Well, I think both would work using distributed ledger technology, where the the Chinese digital yuan, which has been what they have been using for the last 4 years on the Belt Road Initiative. And for your listeners who aren't familiar with that, that's the largest infrastructure project in human history connecting Asia, Africa, South America, and Europe. North of 70% of human population in and of itself right now, 40% of global GDP, most of it is settling on the digital yuan. What better way to roll out a CBDC than to show the veracity of what each nation pledged to the currency? And, you know, I listen to people who I respect tremendously, like Rick Rule, and one of his comments was, well, you know, I don't know if the BRICS is even a starter because it's a non-starter because nations like the European Union, who had a lot of infighting, where some countries are pulling their weight and others aren't, some are working, some are on vacation, different mentalities, different cultures, different history, created not all of the horses running at the same time, pulling the wagon at the same speed. And I agree with that. The hypocrisy of the West, the hegemony of the West, the sanctions of the West is what getting everyone to the table. It's the pegging of commodities that will create equal footing. And if you have distributed ledger technology that shows the veracity, one country pledges oil, one pledges grain, look, in a perfect world, it's gold. And I think gold will, in many respects, be the leading peg. If you look at countries like Turkey, who has already applied to BRICS, they're the largest importers of gold in the world this year, and followed by India, who's already in the BRICS nations. And so the countries, if you look, the countries that want to join the BRICS nations, by and large, have been the largest producers, accumulators of gold in the world. So would gold be the best peg? Yes. Would other commodities work? Perhaps, if you have the ability, through distributed ledger technology, I would argue, to show the veracity and the immutability. And then the last piece of the puzzle in all of this would be, where's it being held? Who's verifying it? You can have a distributed ledger that says this, but who's auditing it? Where's it held? And I think if it were done properly, yeah, I think it would work. But by and large, to me, it would be much more simplistic, much easier, and much better if it were just gold. And if you look at the amount of gold that's being shipped eastward off of the world's exchanges or off of the refineries in Switzerland, record amounts going to China, going to Saudi Arabia, going to India, going to Russia, they're all accumulating and buying and stockpiling commodities, and the largest being gold. So I think it would work using distributed ledger technology, but gold would certainly make it much more simplistic, much more straightforward. I do want to add, though, I do believe it won't be redeemable.
Interesting. Okay.
If you realize that gold was always redeemable in the U.S. system prior to closing the gold window in '71,
right?
President de Gaulle from France proved that redeemable convertible currencies convert, and that's why he sent warships over to New York Harbor filled with dollars, realizing we were printing more money to fund the Vietnam War than we had gold backing. So he demanded redemption, and he got it. And then we closed the gold window. He proved that convertible currencies convert. So I think it will be pegged. I don't think it will be convertible. And the middle ground in all of that would be distributed ledger technology, showing the veracity and the immutability of what is supposedly held on the ledger. And that's the key to the whole system, in my opinion, is a new era of showing or cataloging or identifying or showing with evidence the immutability of what it is that is being held backing up the system.
So central banks have been accumulating gold recently at levels not seen since the 1970s. What about your average retail investor out there in terms of protecting themselves and protecting their wealth? Why is it important for them to hold silver and or gold, physical gold, within their possession in 2023? And maybe you could give us a bit of a contrast there on those two assets, silver and gold, what role they play for your average person out there on the street.
Well, first of all, the easy answer to why you need to hold it or why you should hold it is that it removes counterparty risk. And one of the truisms about gold and silver that Doug Casey made popular a long time ago is that gold and silver are assets that are not simultaneously someone else's liability. I completely and totally agree with that. In a perfect world, we would hold it all ourselves. Some people don't have that luxury, and there are storage options that make sense. In a perfect world, however, I would always hold it myself. And if that is all possible, the removal of counterparty risk to me is such that you have a far greater chance of being ripped off by the system than you do by a would-be burglar. As far as gold and silver are concerned, to me, gold is wealth. It has been wealth and silver too, but both have been wealth for 5,000 years. They've outlived hyperinflation of Germany, 2 world wars, the Great Depression, and every pandemic, and still represent pure wealth. But to me, silver is probably the most undervalued asset on the planet. And we look at that from not only its geologic relationship going back 5,000 years, but also its price relationship with gold. And it is an asset that is woefully underowned, woefully undervalued, and has a massive expansion in industrial applications. And over the past 3 years has taken on a renaissance, if you will, in monetary demand. What really is striking to me, Jesse, is silver is stuck at around $24 an ounce, yet what we have seen over the past few years is the biggest drawdown of physical supply the world has ever seen from the exchanges. So in other words, with leverage and rhetoric, the big banks, the bullion banks, are able to suppress the price of silver, yet a country like India purchased 304 million ounces of silver last year, took possession of 300 million ounces, 304 I think is what it came out to. There's only 33 million ounces in the registered category on COMEX. That's 10 times what is backing the price-setting mechanism of the West. If you took the entire ecosystem of COMEX, all their vaults, there's less than 300 million ounces in those vaults. Of all of that silver, call it 290 million, only 33 million are bars that are available for delivery backing the contracts. So the term rehypothecation comes into play, where there are more contracts than there are bars backing it. If you look at what the London Metals Exchange just said, that if they see demand anywhere near what it was in 2022 and deliveries associated with that demand off the exchanges, there won't be any silver left in 2023. So what we are witnessing, in my opinion, is the value of a generation. However, when the music stops, if it were my choice, I would own gold, because the biggest money in the world, the central banks, the hedge funds, the sovereign wealth funds, the commercial banks, they're all accumulating gold, and I believe it will be the backing of a new system. And so not to confuse people by saying that silver is the most undervalued asset on the planet and maybe a generational opportunity, I think the way to play it is you realize that for 5,000 years, there was a 16-to-1 relationship to silver to gold. And that was geologically based, but also price-based. Even when Isaac Newton was figuring out how we should figure out gold and silver for the currencies of the Royal Mint, it was 16-to-1. If you dug a hole 5,000 years ago, 16 ounces of silver would be found for every 1 ounce of gold. And if you realize that that number has been cut in half, Keith Neumeyer will tell you that it's coming out of the ground right now globally at 7-to-1, meaning it's been cut in half. That geologic ratio for all of time was 16-to-1. Now it's 7-to-1, yet it's priced at roughly 80-to-1. There's a massive disconnection. And if you realize that since the Industrial Revolution, for about 200 years, the average price of gold to silver has been roughly 40-to-1. And that has a lot to do with logistics. But at some point, when you have an asset that has massive expansions in green and digital applications, the geologic footprint has to come into play. If it's coming out of the ground at 7 to 1, if it's priced at 80 to 1, if it's been for 5,000 years 16 to 1, and the last 200 a price, not geologic, but a price of roughly 40 to 1, we're so far out of whack it's crazy. And so it represents the value of a lifetime, in my opinion. But I think there will come a time when we trade our silver into gold, because gold is the money of the banks and the money of the kings. And I think that's where, when the music stops, you want to be. If the worst thing that happened is you own a bunch of silver, you'll be okay. But just to give people an understanding of what I really mean, in 2010, I woke up to see an 85 to 1 ratio, silver to gold. And I did a little research at that time, and geez, this is the second time in human history it's ever been this high. So I told everyone on YouTube, I started doing YouTube videos, sell your silver or your gold right now. I'll sell it to the marketplace and buy silver with it. And anyone who would have done that, in theory, would have got 85 pieces of silver for every 1 ounce of gold. Within 7 months, in mid-2011, we saw a regression to the mean, to its average, of 37 to 1, with $50 silver and $1,915 gold. 37 to 1, 7 months later. So anyone who would have traded 1 ounce of gold for 85 pieces of silver could have traded 37 back for 1 ounce of gold, making almost 2.5 times what they started with. And I think when you talk mathematics and statistics, the further away you get from historical averages, the greater the magnetism that regresses or returns you to the mean. It's like waking up in Minneapolis, where I spent 50 years of my life, in January to 90-degree weather. I would not pull out my golf clubs and my lawn furniture. I would know it's an anomaly. And that's the same thing on a historical context, not only geologically, but also just in its price representation. Going back as far back as you can go, silver represents the opportunity of a generation. However, when the music stops, I truly do believe the place to be is gold, because it will back the next system. I think the next system that arises from this fiat system will have to be pegged to something. They'll have to have a governor. And if it's not, then no one will ever drink that Kool-Aid again. And that'll be gold. And that's why people like Jim Sinclair and Jim Rickards have said gold will go to $10,000. It'll be pegged to a new reserve standard and will never come back down. So look, I could have $1 million worth of gold in a small briefcase and sprint out of this hotel or out of this convention center to my hotel. $1 million in silver, we'd need 6 of our friends each carrying wheelbarrows to make it out, at the same time. So
right.
I think it's gold is the place to be, but silver is the vehicle that gets you to that point.
Great. Well, before I let you go, I do want to also touch on Fed policy here. It's seemingly every headline's about the Fed. Are they going to continue aggressively raising? Are they going to eventually pause? Are they going to pivot? To the point where I'm getting sick of it. But I want to ask about Fed policy in relation to precious metals. How does what the Fed does, whether it's just job owning or whether it's actual actions that they take, how much does that affect the precious metals market, and what should investors be looking out for when it comes to what the Fed is doing in precious metals?
There is a term in economics, Jesse, called Gibson's paradox, which speaks of the inverse relationship between real interest rates and the price of gold. The Fed has done a pathetic job of tackling inflation. They want us to believe they're getting tough on inflation, but what they're doing instead is massaging the way that they gauge inflation. They just did it again here. They changed the metrics here just recently on how they gauge inflation. John Williams of shadowstats.com, who only gauges inflation the way that it was measured prior to all of these changes in 1980, will tell you that inflation right now is 15%. But even if we believe the nonsense that inflation is at 7%, I don't know if you've eaten here in Vancouver to see how much things cost.
I spent $18 on a sandwich the other day.
That's my point. It's insanity.
To say. Yeah.
It's pure insanity, right? So we had room service when we were skiing up in Whistler the other day, and it was $125 for 2 Eggs Benedicts. And so there's inflation, right? But they're telling us there's not. But even if we believe there's 7% inflation, measured against a 10-year treasury right now at 3.5%, you are guaranteed to lose 3.5% per compounding per year over 10 years. They have not gotten tough on inflation, and in fact, they're doing anything but getting tough on inflation. And look, the bond market signals that they're already showing a massive inversion in the yield curve, signaling that they believe the Fed will pivot and start to reaccommodate as soon as things get really bad. All of the tightening that the Fed has done if you look at a graph in comparison to recent or historical tightening cycles, it's way more aggressive than anything we've seen. So the ramifications of the tightening they've done haven't even hit the market yet. But when it does, sometime probably in March or April by most economists' estimate, that's when they believe they will pivot because the economy will start to break. You're already seeing massive layoffs and all the big corporations and all the banks are laying off people, but the economy hasn't slowed down yet. When it does and it starts to crack, that's when the smart money, the bond traders, believe they will reverse course and signal, like all governments have done since the beginning of time. They will choose inflation over austerity, the printing press over the tough decisions. But I will simply say this to you. You know, Fed Chairman Powell says his hero was Paul Volcker. Paul Volcker was the last politician to ever, pardon my French, have balls to do something enough that it would not be very popular nowadays. And what was that? He raised interest rates to 20%. You raise interest rates right now above real inflation. So you raise interest rates to 15, 16, 17%. That would stop inflation in its tracks. It would also blow up this economy in ways that no one could even imagine. They won't do that. They won't get tough on it. In fact, the smart money, the smartest traders on the planet, that being the bond traders, are telling you it's just a matter of a few months before they pivot, as we keep hearing, reverse course, and go back to QE instead of QT. So in theory, if this was real and they really were to raise rates high enough to combat inflation, raise the reserve requirements in the banks, which currently are zero, then it would have a negative impact on gold. But this time, I think what it is also, what the Fed is dealing with, what we are dealing with, is not just rates rising in a bubble. I think we are dealing with the end of the petrodollar. And as the dollar collapses and rates rise, you're not going to feel safe inside of government treasuries as the dollar is collapsing and being forsaken and dumped. So there are real risks this time. It's a much more complex stew of mishmash, but in this case, I would say what they're going to do is nothing but kind of a sideshow, if you will. And I think the rest of the world will choose gold over the safety of the U.S. dollar. And that's really it, in that I've always looked at gold as the safe haven. The world for the past 50 years has looked at the dollar as a safe haven. You have rising rates and a crashing dollar. That's not the same thing as rising rates and a dollar that's not collapsing and being forsaken as a global reserve currency. So this one's a little bit more complicated, but I would simply say this. The Fed won't raise rates enough to make a damn difference in the price of gold, and the world and the markets choosing where interest rates should be will have a greater effect, especially as the dollar starts to cascade down. And that, to me, is the biggest reason to own precious metals right now as wealth in a period of time where what we consider to be wealth is coming under question and under fire.
Well, thank you for all that insight. Learned a ton. Could you let us know about Miles Franklin Precious Metals before I let you go?
We've been in business for 33 years. We've never had a customer complaint in $8 billion in sales. We're one of only 27 U.S. Mint authorized resellers. We maintain an A+ rating with the Better Business Bureau. I like to believe we have the best reputation in the industry. I really do. But the state of Minnesota, where I left my corporate entity, even though I moved to Florida a year and a half ago, is the only state in North America that licenses what is a federally non-regulated industry. You must be licensed and bonded to sell precious metals either from or into the state. Therefore, nearly 100% of my competition in the United States will not do business in the state of Minnesota because they would have to be licensed, bonded, and background checked, which is a lot. The bonding alone is you have to personally guarantee as the owner the bond, and that's not something anyone's going to do in the United States if Minnesota is the only state that requires that. So it holds us to a much higher standard. So while I believe our reputation puts us at the top of the table, top of the list, state of Minnesota puts an exclamation point on that with our bonding and our accreditation.
Great. Well, I'll put a link in the description below for anybody interested. I believe people can also email you at Miles Franklin as well,
they
right?
can send me an email at Andy at Miles Franklin, or general questions, you want to get a price list, info at Miles Franklin. We won't be undersold. Your listeners won't be the first complaint we've ever had in 33 years. And mention Jesse sent me, and they'll get special care. I can promise you that.
Okay, well, thank you so much, Andy.
I appreciate being
Great
here.
to finally sit down in person, and we'll have to have you on the show again.
Looking forward to it.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.